on the EPS estimates, they won't be scaled down too much. The company in the first half of the year has already done about 65 rupees by way of EPS. The estimates consensus would be at 131. So you've already done 50% of your consensus expectations. So I think considering that they want to maintain their margins, EPS estimates should not get scaled down too much because of the fact that their margin defense has been strong. But on Infosys, well, again, expectations are not very high, though much more than what from TCS. A dollar revenue growth of 2.3%, margins coming in at 24.4% versus 24.1%, an improvement of 30 basis points. The key will be their guidance. Their guidance was scaled down in Q1 from 11.5% to 13.5% was what they started the year. They brought it down to 10.5% to 12%. They're expected to further lower it down to 8.5% to 10%, some going even as low as 8 to 9.5%. But anything below that 8.5% is going to come in as a bit of a disappointment, though it seems unlikely because right now, currently, consensus estimates for constant currency for the full year would be closer to the 9% mark. A couple of the other things to watch. One would be, of course, their outlook on BFSI because there they've already highlighted some softness. Secondly, a spate of senior management exits is worrying. Thirdly, we want to see a ramp up in deal wins. The company's current deal win run rate is $700 to $800 million. They want to hit $1 billion. Can they do that? That is something which will be needed for the company to start delivering on the top line. And fourthly, I want to add retail because that's where TCS has seen broad-based weakness.
For that, what will be interesting is